Welcome to the Royal Ties Podcast. My name is Clarck, the Financial Credit Coach, and I will be bringing you information acquired through first-hand experiences in order to help you increase your credit score, reduce interest rates, increase savings, and eliminate debts. Doing it for the community, from the community, and by community I mean any and everyone who wants to learn and evolve. So let's get right into it. In today's episode, we'll explore strategies for maintaining good credit during your retirement years. Just because you've retired doesn't mean credit management becomes any less important. Let's dive in and discover some helpful strategies for maintaining good credit in your retirement years. Now, I usually deal with the teens, the young adults, the, entrepreneurs, people of that nature. But I want to take some time to speak to my people that are nearing their retirement age because you're important too. And financial literacy is absolutely important to your segment as well. So understanding the importance of credit in retirement. So while retirement may bring changes to your financial situation, maintaining good credit remains essential. Here's a few reasons why credit management is still important in your retirement years. Financial flexibility. Well, I'm pretty much finished paying off my home, I hope. All my vehicles are paid off. I've traveled. My kids' school should be paid off by now. So flexibility shouldn't be so important, right? Well, good credit provides financial flexibility, allowing you to access credit when needed. So whether it's for unexpected expenses like, medical emergencies or helping family members, having good credit ensures you have options. And as you're retired, you no longer have the same type of income coming in. You need to make sure that you have options. It's extremely important, right? So, future borrowing needs. Even in retirement, you may have future borrowing needs, believe it or not. Listen, retirees, your life is not over. You're about to enjoy the best part of your life. You've worked for so many years. You've provided for your family, for yourself. Now it's time for you to really enjoy your money and enjoy your investments for yourself, I hope. Future borrowing needs, meaning even in retirement, you may have future borrowing needs. So whether it's refinancing your home, purchasing a vehicle, or taking out a personal loan, good credit opens doors to favorable terms and interest rates. Favorable terms and interest rates. Yeah, you don't want to be on long-term loans. You don't want to have high interest to pay. You want to make sure that you're getting a fair deal. Insurance premiums. Your credit score can also impact your insurance premiums. You're like, what? Yeah. Many insurance companies use credit-based insurance scores to determine premium rates. Maintaining good credit can help you secure more affordable insurance coverage. You don't want to be spending a bunch of money on insurance when now you've gone ahead and handled everything you need to do your whole life and had great rates, but because you've let your credit fall off because you were like, oh, I'm not going to finance anything else, now your insurance premium is through the roof? No. It's important from beginning to end. So here's some strategies to help you maintain good credit during your retirement years. Take notes, all right, because this is important. Monitoring your credit score. I talk about it for the youth. I tell them when they become adults, they need to learn how to monitor their credit. I tell the young adults, you need to consistently monitor your credit. I tell people who are professionals about to start their business that you need to be monitoring your credit. And even after you retire, you still need to monitor your credit. It's extremely important. Monitoring your credit report to ensure accuracy and identify any potential errors or discrepancies. You're entitled to a free credit report from each of the three major bureaus annually. I only talk about two, really, and you know what I'm going to say. Borrowell, Credit Karma, they're free. Download the apps. If you're not an app person, in your retirement years, get a granddaughter, grandson, someone to help you. Add the app. It's so simple. But monitoring your credit allows you to address any issues promptly and maintain the integrity of your credit profile. So when I say integrity of your credit profile, it's not because you're in your retirement that it doesn't matter if something bad pops up. You want to maintain that. And you want to make sure that your name stays clean all the way through. Make timely payments. Always pay your bills on time, including credit card payments, mortgage payments, and other loan obligations. Timely payments contribute to a positive payment history, which is an important factor in maintaining good credit. Again, I talk about this all the time, but I want to reiterate it because it's not because you're in your retirement years that it's not important. It absolutely is. Absolutely. Maintaining a low credit utilization ratio, which is the percentage of your available credit that you're using. Aim to keep it under 30%. I've seen some people say, go, no, 30% is too high. You should go lower. 30% is safe. Don't let anybody tell you any differently because they want to push the narrative. It's safe. High utilization can negatively impact your credit score. You don't want to have a high utilization. On top of it, if you have a high utilization consistently, you're paying interest. You don't want to pay interest, right? So keep it as low as possible. Use your credit wisely. So be mindful of your credit usage and avoid taking on unnecessary debt. Use your credit cards responsibly. Don't give your grandchildren your credit card to use. Don't do it. Don't do it. They should have their own credit card. And if they don't, send them over to me. www.clarkcadet.com. I'm going to get them right. Let them earn their own credit. They don't need to be using yours. Pay your stuff fully in each month as if you would at any other time. If you spend $400, pay $400. If something happens, you can't pay the whole $400, pay $300 and pay $100 the next month. That's fine. But I want you trying to keep that balance to zero as much as possible. And the reason for that is you don't want it to have an impact on your credit. And if it does, it's going to make it harder for you to co-sign for others, which I don't suggest. But if they come to you and ask for it, you need to have that utilization as low as possible. Maintaining existing credit accounts. Keep your existing credit accounts open and active. That can help you maintain a good long credit history. And it also demonstrates stability to the creditors. So, however, be sure to use the accounts responsibly and avoid excessive credit card debt. Don't have a bunch of credit cards that you don't use and just be using them just to use. Use them properly. You don't know how? www.clarkcadet.com. I serve everyone in the community from teens to retirees. I'm here for you, okay? Consider credit-free options. In retirement, you may have the opportunity to transition to a credit-free lifestyle. Consider alternatives to credit, such as using cash or debit cards for everyday expenses. This can help you avoid unnecessary debt and simplify your financial life. It's true. Seek professional advice. If you're unsure about credit management in retirement or need guidance on specific financial matters, there's this Clarck guy, man. He's really good at what he does. He's from your community. He went to the same schools your kids did. He shops at the same stores you do. He went through it all. He just didn't have anybody to teach him this stuff. So he became the person that he didn't have for his whole community. You want to support him. You want to support his cause. Trust me. So you can contact him. You can contact credit counselors. There's always professional advice too from banks as well. There's a whole bunch of different options, but obviously it's better for you to hear it from somebody who lives the same lifestyle as you or your children or grandchildren. He's the dude you want to talk to. So, protecting your identity and credit. Man, I hear about so many scams, so many, older people being taken advantage of. And it's just so wrong because people come in, they build, they get their trust, and then they go and they take their information and they do so many horrible things to them. So it's important to remain vigilant about protecting your identity and credit. Here are a few tips to help you safeguard your financial information. I think this is important to talk about it. Monitoring your accounts. Regularly review your bank account and credit card statements to identify any unauthorized transactions. Report any suspicious activity immediately. Contact Equifax, say, hey, this wasn't me, something's going on. Contact the credit card company, hey, this wasn't me, what's going on? Do that. Be wary of scams. Stay informed about common scams targeting seniors and retirees. Be cautious when sharing personal information over the phone and online, and be skeptical of unsolicited offers. Somebody calls you randomly, uh, hey, you need to pay this, da 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 da. Be wary. Somebody sends you a text message, hey, you need to pay this fee for this package, enter your credit card information. Be wary. There's so many scams going on, unfortunately, in Canada, and they're taking advantage of people who are not aware. So I hope this goes out as a PSA to be very, very careful. Double check everything. Use strong passwords. Use unique passwords. Don't use the same password everywhere. I know it's hard to keep up with. Write them down somewhere. That way, you have one place where all these things are written, not multiple places. Which brings me to my next point. Shred sensitive documents. Please don't have documents everywhere. Mail you've received that has personal information just sitting around and then you don't know what to do with it and you throw it in the garbage. People go through garbages and steal people's information. Shred it. If you can't shred it, get some scissors, cut it. If you don't got scissors, call your grandchild, call your child to come and help you. If they're not available, contact me. I will literally come and shred. I'll bring my shredder to wherever you're at if I have to help you and destroy your stuff because I don't want anybody to take advantage of you. In conclusion, maintaining good credit in your retirement years is important for financial flexibility and future borrowing needs. By monitoring your credit, making timely payments, keeping credit utilization low, using credit wisely, maintaining existing credit accounts, considering credit free options, seeking professional advice, and protecting your identity and credit, you can continue to manage your credit effectively throughout retirement. I love y'all, man. Listen, I've got a big place in my heart for retirees, for the older generation, because they help raise the current generation, and that current generation is going to raise the next generation. And I want us to really always have that alignment. I hope you learned something today. If you did, please like, follow, and share. Tell a friend to tell a friend. Let's bring financial literacy to an end. Let's get it. Yeah. My name is Clark, the financial coach, and my motto is simple: pay attention or pay for lack of attention. Please follow me at Clark, the financial coach, on Instagram.